I'd want to congratulate all of you who have been here since before the recent sharp rise in the price of XRP. I mean, congrats! You may have become wealthy because you were the first to invest in XRP before the institutions did. Even though you've only recently begun purchasing XRP, you're still well ahead of the majority of the institutions that will eventually do so. You know, when you're first starting, you only feel like you're late to investing, but I'm telling you, if you wait a little while, you'll see that your viewpoint does change in the end. I mean, can you picture telling someone in 10 years that you need to invest in XRP in 2025 if you intend to remain here? They will aspire to be you. Okay, so this is going to be a really interesting video for you because, in my opinion, there hasn't been enough discussion of this subject in the XRP community. But I'll make my case here. I think it is pretty clear that the traditional lemming retail speculators and day traders, among others, are not the main source of the price increase of XRP since November. No. In fact, it's not the same as it has ever been. Institutional funds are coming in. In fact, it is, and there is evidence to back this up. Indeed, there is. Consider the following headline: Institutional interest and ETF optimism fuel the XRP price rise. This dates back to mid-July, the main driving force for XRP's post-November 2024 surge up to this point. Although there aren't any spot ETFs in the US, institutional money is obtained through corporate treasuries, whale accumulation, and ETF access. There is also strong on-chain use for tokenizing real-world assets. It's another significant one. That's something I've been discussing a lot lately. As you can see, the following is cited in this article. Recent data from market analytics platforms like Crypto News and Soundament, an on-chain analytics company, I love them, indicates that increased whale activity, ETF optimism, expanding institutional partnerships, and growing retail interest as seen by social media engagement have all played a major role in the XRP price rally. Not that there isn't any retail interest, mind you. I believe there are plenty. It's pretty clear, in my opinion, that there is a lot. The amount of money coming in makes it clear that the institutional side is the source of the money that is truly driving the market here. I would like to discuss the ramifications of that. You'll see that the ramifications of it are that this cycle may absurdly outstrip everything we've witnessed in the past, and let me explain why. The involvement of retail speculators was supporting. Sentiment and speculative momentum were certainly driving it, but nothing on the retail side had the scale to dominate. It simply did. The data points to that conclusion. Retail enthusiasm will be the driving force behind XRP's price explosion later in the market cycle. As the price rises, those who were early adopters, including institutions, will profit. They'll be. You can take note of what I said. At the same time that novice market participants believe the market is merely getting hotter, they will be making money. It will simply continue to rise indefinitely. Think about what transpired in 2017 to get a sense of the impact that retail participation has on the market during periods of market excitement. XRP was trading at half a cent. It increased from half a penny to a peak of $3.35 in just a single year. Institutional involvement in the cryptocurrency asset class was essentially non-existent at the time. We can be sure that regular, ordinary cryptocurrency investors were responsible for the massive price spike. In 2017, it was driven primarily by retail investors. It was a very big change. But it was 8 years ago. This market cycle will see a peak in retail fever. This time around, there will be a lot more market players, so it will completely dwarf what occurred in 2017. It is simple to understand why things are set to go crazy when you take into account that XRP is now resting comfortably above $3, and you realize that's without retail being the main driver of the market activity. Really, things are going to quickly get really crazy. And notice that this is the base price, which is once more than $3. Before the market craze begins, we have it as a baseline. Once more, the influx of institutional funds is responsible for it. Compared to 2017, there will be a lot more individuals speculating on XRP this time. Think about this. I doubt anyone will be surprised to learn that, according to a 2017 study by Cambridge University, there were between 2.9 million and possibly as many as 5.8 million distinct cryptocurrency users worldwide, the majority of whom used Bitcoin wallets. In general, however, there are between 2.9 million and 5.8 million cryptocurrency users. In fact, I can show you right here. The pertinent section is the one I have underlined on the screen. This is the real 2017 document. To let you view the title, I'll scroll to the top. The Global Cryptocurrency Benchmarking Study is now available. It was published by Cambridge University in 2017. Going back and seeing what people were saying about XRP in the document they were researching so long ago is entertaining. In any case, there weren't many people working in crypto at the time. Therefore, even while these numbers do encompass the whole cryptocurrency market, it is accurate to say that the 2.9 to 5.8 million individuals in that range encompass not only those who have invested in XRP. However, that helps us understand the scale. It continues to do so. Only a few million people owned cryptocurrency at the time, and it was still in its very early stages. Therefore, the number of retail participants, specifically related to XRP in 2017, was probably in the low millions or less. I am aware that the blockchain is public, of course, so you can see the number of wallets that were made. You can't rely on it. This is due to several factors. One explanation is that some people have several wallets, but there are also shared wallets. However, without getting too technical, just know that it would have been a significant portion of the little population of 2.9 to 5.8 million people that invested in XRP. As I've been saying for a while, it took nearly no humans on the globe in terms of percentage. You might as well round it down. There aren't many to bring the price down to $3.35. For this reason, I've been so hopeful for years that when the market returns and there is legal certainty, there will be enormous benefit since the foundation of XRP is stronger than ever. However, even if there weren't many users in 2017, the price of XRP still reached $3.35. Amazing, isn't it? Yes, indeed. Yes, exactly, it really is. In 2017, there were only a few million cryptocurrency investors worldwide. How many are there now? According to ADA, a company that specializes in cryptocurrency ownership data, there will be an estimated 560 million cryptocurrency investors by the end of 2024. That amounts to roughly 6.8% of the world's population. And their website is this. This is how it seems to you. The AAA website is that one. The use of cryptocurrencies is expanding globally. Being a top Bitcoin payment firm, our goal is to give businesses important data so they may better understand the market and take advantage of unexplored prospects. We projected that there would be over 560 million cryptocurrency owners worldwide by 2024, with an average ownership rate of 6.8%. Well, that's quite a leap, isn't it? Since we don't know, having euphoric peak market euphoria will attract a lot more speculators. No one is likely to rationally contest that, in my opinion. However, they stated that by the end of this year, 2025, that figure would rise to 750 to 900 million people, since peak market frenzy will attract a lot more speculators. So consider this. Consider these figures. Consider how expensive we were for such a small number of people. Take a look at how many more are entering. I think you understand where I'm headed with this. How could the price of XRP not soar from its current level, given the influx of new investors? And given the widespread adoption of cryptocurrencies today, I believe it's reasonable to conclude that there are currently significantly more retail players. Retail engagement at the next market top might be 1 to 2 orders of magnitude larger than 2017 levels if even a small portion of these new users speculate on XRP. And now I do think that's a really plausible theory. That being said, a 100x gain in price is not guaranteed, even if, say, 100 times as many individuals purchase XRP as there were in 2017. What's the reason behind that? In 2017, the majority of participants were purchasing with limited cash. In 2017, markets, particularly those for XRP, were much less liquid. There were a few order books. As a result, little purchases led to significant price changes. It's accurate. That is entirely accurate. It's also the reason I usually say that the more money you put into something, the more difficult it is to get it to double, triple, quadruple, and so on. That's why investing early pays off, isn't it? But please take this into account in 2025. Compared to 2017, XRP investors will have far greater liquidity, which means that order books can handle a lot more volume before the price makes a significant swing. Although 300 XRP is not likely to occur this market cycle, I believe this clarifies why price projections range from the lower end of $10 to those that reach about $30. It makes more sense, in my opinion, why those price projections that range from $10 to $30 are safely contained within the bounds of reality. And I'm not sure which analyst will be determined to be the most correct at the end of the cycle, but I'm certain that none of it is absurd. That's all safely contained within reality. Additionally, as I mentioned earlier, institutions that have amassed wealth in the past may use it to fuel retail-driven optimism, which would also slow the rate of growth. Even when there are more buyers, price appreciation is slower if major holders release supplies gradually. That's the way it is. That's all right, though. That's all to be expected, I suppose. But what I'm trying to imply is that a lot of people will be responsible for all of this price movement. And you've beaten the madness if you're seeing this video in late July or early August 2025. But it will happen. It's coming, for sure. Those who made lower-priced purchases will be selling into that frenzy, I promise you. Additionally, those who are buying into that hysteria will have unwarranted confidence. Many of them will have never invested before. They're going to be doing just that. Furthermore, it won't be shocking. I found this post on investing.com, and they discussed how the usual lemming retail speculators behave in this situation. This article is fresh, even though it wasn't specifically about cryptocurrency. Actually, it's from around a week and a half ago. Retail speculation is reportedly back and stronger than ever. All right, so they were discussing the stock market here. Additionally, that is subjective in this case. We're obviously not in euphoria in crypto. However, everything he said about these tendencies also applies to cryptocurrency. Simply put, investing in the cryptocurrency market carries a far higher risk and a much larger investment. However, that's why I adore it. The tremendous volatility is what I'm here for. Because investing is meant to be volatile. What would we be doing here if there were no volatility? Investing is meant to be volatile. In other words, I prefer it when it's quite redonkulous. Thus, he wrote the following in part: "This retail speculative cycle is not new. We observed how novice retail investors were flooding markets in early 2021, only months before the market's correction in 2022. In an article titled Long on Confidence and Short on Experience, what a catchy title, we discussed how retail traders showed a lot of confidence, but lacked the knowledge necessary to properly manage risk. Similar speculative moments from the late 1990s and mid-2000s were echoed by the spike in online searches for terms like how to trade stocks. So they're on their way. The wonderful part is that, as I write this, XRP has once again reached a base level where it is comfortably hovering above $3. It is still capable of dipping. That is irrelevant. I'm simply telling you that in comparison to where it was even a year ago, it's at a new level. It's in a new realm, a new normal. In fact, drastically different. And believe me when I say that institutions are to blame for this. Additionally, retail mania always follows a cycle. I'm telling you, there will be a significant spike in XRP due to these retail folks who aren't here yet, at least not many of them. And I'm just saying that it's fantastic to know that we've reached this price point with XRP, which was impossible in 2017 due to the lack of institutional money. However, it's important to recognize that the vast bulk of what has happened with XRP has been driven by institutional money. And once more, I'm not saying that this hasn't been driven by retail activity. Wallets, this and that, have obviously increased. However, it's coming from the perspective of monetary inflows, which is what matters most. And it's not really up for debate. This is exactly what the data here shows. Therefore, knowing how few people it used to cause price increases in the past and realizing that even with varying liquidity conditions, I simply believe it will be astounding. The price changes that occur will be really astounding, and we'll see what that means at the end of the cycle, but I believe it's much higher than this. For this reason, I stated at the beginning of the movie that if you are here at this time, you will be wealthy from investing in XRP since you arrived before the wealthy institutions. Obviously, you could also include the usual limiting retail speculators who arrive at the end of cycles and pretend to know everything when, in fact, they don't. They will arrive. The exit liquidity is what they are. Folks, that's what's going on. That's what's taking place.